Hey everyone, welcome to the weekly review. This week I'll start with the standard deviation channel from the October low where this move originated in 2022. And we can see that we're getting close to um, two deviations for this move where we got rejected last time. And I drew a hand-drawn version of this trend line, which I think is more accurate because this one is automatically generated. And we have contact here, a bit of an overshoot here, and that's why I let it be a bit lower than the tops. Contact here, overshoot, hugging the breakout but not moving higher, then goes back in and flushes. And we are once again at this level, maybe go a bit higher, but it's stretched. And we had these last 2 days, we had 60 to 70 UVol, 65 to 70 UVol, and it failed to push higher. This is similar to last week when we had back-to-back 80 plus down volume days here and here, and it failed to gain momentum, like minus 0.37, minus 0.56, lower wicks on both of them, so it got bought at the end of the day as usual. Now we are getting a bit of a rejection on QQQ, third rejection and 1-2, and the third one we push lower and potentially doing some momentum to the downside. So this in spite of having 60 plus UVol for Qs and 65 plus UVol for SPY. Not SPY, for New York Stock Exchange. Sorry, this is not SPY. So move is tired. We need another reason to go up, and that reason can be one of two things. Earnings next week. We have the biggest earnings week of the quarter with Google, Microsoft, GM, Amazon, Apple, Meta, blah blah blah, all oil majors. A lot of earnings next week. We have Nucor as well. I'll talk about that one because I'm interested to see if it breaks out. And most likely the biggest impact will be JPOW. We have the FOMC on Wednesday, and JPOW can choose to be a bear or can choose to be a dove. Ambiguity and not taking a position means he is dovish. The market will love it. What JPOW needs to do to push us lower is say no rate cuts until the fall, until fall, because the market expects the first cut potentially in March. Given the very hot GDP print, it's unlikely that it will be in March, but he basically has to push against rate cuts very soon. If he's not decisive and not explicit in this, meaning I, the best case scenario for the bearish case is to say no cuts until fall. If he's ambiguous about it and leaves stuff on the table, data driven, blah blah blah, the same speech he's been doing for quite a while, the market will take that as bullish, meaning cuts are still on the table for March. And if that is the case, most likely we break out here, we go a bit higher, as high as, I don't know, 498, something like that, for 500. This combined with earnings. But earnings shouldn't trump um, JPOW if he's bearish, because we've already had up moves across the board for various names because of TSM earnings. There was another Netflix earnings. Tesla earnings didn't cause a big drop. They were ignored completely by the market. So because of Netflix and TSM, we already had a move up in across the board in mega caps uh, and semis. Because of this, everything is already up. Mm, it's hard to justify another move up unless earnings are absolutely spectacular. So that's kind of the reasoning. So I think JPOW will matter a lot more than earnings next week, and he can give us a pullback if he's bearish, and another move up if he's dovish. Now, another thing I think is worth considering is we haven't had a bearish close in quite a while. I think since the drops here in October 2023, and even this they were kind of mild. Maybe we got a bit of them here and here, but we didn't really get a bearish close. Meaning, on in the last 40 minutes we get a flush, a significant like 0.5% relative to the extra from where we were at that point. So if we see a flush towards the end of the day, that might be a sign that a more sizable bearish move is beginning. If we keep seeing the close being saved, and by the way, on Friday, yesterday, we kind of saw that it wasn't a big move, but it wasn't bullish anymore. We kind of get a push up on the close, but on Friday we didn't, and that's a sign of things to come, that the uptrend is weakening and tiring. Uh, Also, VIX didn't go down that much for a Friday. We had uh, yields go up and go down. When they went up, the market reacted negatively, but when they went down for the rest of the day, because this is what they did on the close, the market didn't react positively. The market actually went down, and this is especially true for IWM. Yes, yesterday IWM was up. Let's see, relative to the open, no, to the previous day. 0.98 was up relative to the previous day, and then it just faded for 0.97. It basically closed where it was yesterday. This in spite of yields pulling back. This is we closed basically flat on the 20-year. It went up and uh, caused the move down initially, but then it retraced back to where it was. And IWM, which has reacted very positively when yields go down, did not go up. And if we look at the weekly, this is very concerning for IWM. That is, it's not breaking above this level here. This is a very important level for IWM. Basically, this was an overshoot, but this is the important level, like 196. It has to close above it to go in a bullish phase. Right now, it's looking like a rejection, and potentially, if it tries and fails again, it will give us a move lower to retest the AVU up here, probably, maybe even lower. We shall see. Then we have oil with a very bullish candle. Oil has been trying to get rejected over and over again. Look at this shit. Like every day it gets pushed down and it recovers. It gets pushed down and it recovers. Gets pushed down, recovers. It's it's being manipulated, not and it is visible in oil stocks as well. Like every fucking day with the lower wicks. This is bullish for them, and I think it will lead to a big candle um, soon, in which it like the bears give in, and we get like this kind of candle, and basically a squeeze because people are very short oil. Uh, yeah, that's kind of it for the market. Let's look at for the macro overview. Let's look at the details. This was my broadening formation. Deleted the lower one. I'll draw it again. Something like this. And we went above it, but it's not gaining momentum. So just like any other horizontal level and the fake breakout or breakdown, when this goes back in, and if it does goes back in, it most likely will cause a flush down because it goes back into the level. It's a failed move, and it will go down. Uh, Besides this, AVU up from this low, AVU up from this low, AVU up from this low. So Short term, the type of move that would be just a very brief pullback would be this. It goes here like 483, finds support, maybe overshoots a bit, then bounces, and then if it recaptures, it's probably going to go higher. It will actually be a full breakout, not just an attempt to break out. This will be like the JPOW is bullish scenario. Same thing can happen by going lower. We go back to the 2023 high, turn into support, and it does the same thing. If this one doesn't fall or doesn't hold, we go lower. I think this is the bear scenario that has a bit of momentum. First target is this one. So the AVR from the October low. If this one doesn't hold, as you can see, we go in the broadening formation to extend it. If this one doesn't hold, it's another sizable move down to the 2023 mid. That's kind of it. If it holds, we go back up. We probably do one more tag of the broadening, maybe break out again, maybe go back down. This kind of thing. Um, yeah, so this is for the short-term move. Given how feeble the breakout has been, I don't see it holding here. So I would bet more on a move to the 2023 high. So 477-ish, maybe a bit higher, 478. And this AVU up here, and potentially a bounce higher. This can happen even before JPOW. So it's not, given how overextended we are, and getting like a 2% pullback over 2 days on Monday and Tuesday is completely reasonable and still very bullish. Like this will actually be very bullish for a bully JPOW. If we are here when JPOW is bullish, let's say, I would mm, I would be somewhat skeptical of a move up, meaning like we are at risk of rejection. You see, like we go to standard deviations above this AV up here, it usually gets rejected when we do that kind of move. So if we rally from here and go to 496, very high chance we get a strong reversal, and that kind of puts a top in this rally, and then the risk is even higher for a push down, a very fast push down here. But if we first retrace, what the fuck? I just wanted to. If we first retrace, then it's going to be a much more healthier bounce if we go up because JPOW is bullish. So this would be healthier. This would be a blow-off move, in my opinion, and it would very quickly get rejected. Um, yeah. So that's kind of it. I'll do another video Monday morning on uh, a bunch of individual names. That's going to be a bit longer, but that's it for the market for now. It's We are overextended, obviously. We have lots of events that can move the market next week, so its prediction is kind of difficult at this point, uh, and many variants depending on outcomes. The only thing I am bullish on, without a doubt, is oil. Okay, have a good one. Bye bye.